Hi everybody, it's Clarke Camper with the May edition of Wall Street in Washington. I'm pleased to be coming to you overlooking the newly rebranded New York Stock Exchange floor. You can see the logo, I think, changing behind me as I speak. Today I wanted to do something a little bit different, and that is to bring out the old crystal ball. I want to crystal ball what we can expect to see the remainder of this year and into 2013 in three areas. The first is the November federal elections. Second is Taxmageddon, and the third is finalization of the Dodd-Frank Derivatives Provisions. First, in terms of November elections, you know that I've said in previous editions that I believe the presidential election is going to be very, very tight. But the fact is, regardless of who wins at the presidential election, I expect that the Congress will remain fundamentally the same, and I'll come right back to that. But the result will be that the gridlock that we see, the partisan gridlock that we see right now in Washington, will continue and I think even get worse. Now, why do I say that I think Congress is going to remain fundamentally the same? By that, I don't mean necessarily that control of either house won't change. In other words, I think it's possible that control in the House flips from Republicans to Democrats. Probably not likely, but who knows. In the Senate, it's really anybody's guess as to whether or not Democrats continue to control or Republicans end up taking over. But the bottom line is, really focusing in on the Senate, there will continue to be a 60-vote Senate bottleneck next Congress, just as there is in the current Congress. Now, by that I mean that under Senate rules, it takes 60 votes for any meaningful action to be taken. And after November elections, under any scenario that I see anyway, neither party will have 60 votes required. So again, whether Democrats control, Republicans control in the Senate, they're going to continue to have the Senate bottleneck. And as I said earlier, I expect that this partisan bottleneck will get even worse. Why do I say that? Well, if you look at the candidates who are likely to be elected in November, particularly to the Senate, not only, though also to some extent in the House, but particularly in the Senate, these candidates are more partisan than the members that they are going to replace. So what we're seeing again, both in the House, but particularly in the Senate, is the decline of the moderate middle and an increase in the kind of level of partisanship. Now, again, taking it back up to the macro takeaway, what does that mean? It means continued gridlock, and as I say, probably intensified gridlock next year, regardless of whether we have a President Obama or a President Romney in the White House. Now, moving on to Taxmageddon, I've talked about Taxmageddon in at least one past edition of Wall Street in Washington. That's the term that people are using to describe the situation under which, through current law, starting January 1, 2013, a collective $500 billion in new taxes, that's a B, $500 billion in new taxes will be levied on the U.S. economy. Again, that's under current law. So the question is, can Congress, can the President do something to alleviate that prior to January 1? Flipping back to what I was saying about the incredible gridlock, I think that what we can expect between now and November is nothing other than posturing. You've already seen some of that happening. But right after November, just before January 1, I do believe that you will see some movement on Taxmageddon, and again, crystal balling it, I think you'll see largely an alleviation. In other words, that $500 billion will be, if there's any tax increase at all, it will be a very, very, sort of a shade of that $500 billion total. The new Congress and the current Congress may be partisan, but frankly, they're not suicidal. They know that the economy and the American public would not stand for such a tax increase. So, how are they going to accomplish this? Well, I think what they're going to do is get out that big old can, and once again, they're going to kick the can down the road. What does that mean? It means that Congress, after the November elections, will scramble. They will not meaningfully address the issues created by Taxmageddon, both the spending and tax issues. Instead, what they'll do is find short-term fixes to, again, kick the can down the road for some short period of time. Again, the good news is that I don't believe Taxmageddon will hit with full force. The bad news is that the fundamental structural issues that underlie Taxmageddon will continue and will have to be addressed at some point down the road. Now, finally, I wanted to say a word about the Dodd-Frank derivative rulemaking provisions and what does gridlock in particular mean for the CFTC as they rush to finalize these provisions. What I think the continuing and intensified gridlock means is it really from a CFTC perspective, nothing changes. Another way to put that is probably we're going to see more of the same, that you're going to see Dodd-Frank critics, largely Republicans, continuing to call for a rollback or, in fact, wholesale repeal of Dodd-Frank. I should say that, by the way, Governor Romney is calling for a wholesale repeal of Dodd-Frank and is saying that if he is elected president, he will seek to repeal Dodd-Frank in its entirety. But as I'm saying, I think that's unrealistic. I think the bottom line is Democrats will continue to support Dodd-Frank, and neither party in the Senate will have the 60 votes to significantly change or repeal Dodd-Frank. And at the end of the day, what are we left with? We're left with the same statute, the same rulemaking requirements. So drilling down a little bit more, and again, bringing out the crystal ball again, what does that mean that we can see from the CFTC? Well, as I've mentioned in previous editions, they've gotten up a good head of steam. They've got some momentum going in terms of finalizing the derivatives rulemaking provisions. I predict that by the end of the year, we will see at least one kind or some kind of a swap product subject to a mandatory clearing requirement for at least major swap participants. Now that I'm only describing a subset of the universe of products and a subset of the universe of entities to which the Dodd-Frank derivatives provisions apply, but I do think that importantly, by the end of the year, by the end of 2012, you will see this clearing mandate apply at least to some portion of this universe. What does that mean for 2013? I think that despite, again, this sort of partisan bickering that will continue in the background, I think that puts the CFTC in position to finalize in its entirety the Dodd-Frank derivative rulemaking provisions by the end of 2013. So with that, I will say goodbye, and we'll see you next month on Wall Street and Washington.